Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the market. So things just got worse for Bitcoin and the SP 500 as the markets confirm a major momentum flip. We've also got Bitcoin finally having that bearish engulfing candle flip from this major box we've been talking about on the channel. So let's talk about this. It looks like the next major move for the markets is literally right here, right now. So as we talked about in our last video, Bitcoin was setting up for an extremely important weekly candle body close. We talked about what would happen if Bitcoin closed beneath 28,000. Namely, you've got this nasty bearish engulfing candle on not only Bitcoin, but on the total cryptocurrency market cap and the total altcoin market cap at this moment in time. The cryptocurrency markets are looking extremely weak as we reverted back into this major box. This was support all throughout the major distribution phase at the top of the bull run, and we have just reverted back into this, retested it, and got a bearish engulfing candle closing beneath all of these final wicks down here. 28,000 was really your last line in the sand, and as you can see, the markets are getting major continuation, just like we talked about yesterday. So what's going to be coming into this week? Well, if we jump into the charts, as we've been discussing on the channel, now we've got this confirmation of the close underneath 28,000. 25,000 is an absolute magnet. If we're just looking at this ascending triangle, we've of course had a red formation to the downside of this. We are falling into the daily EMA ribbons right now. The last time we fell underneath the EMA ribbons, you can see we catapulted down about 12% in 1, 2, 3 days, and it looks like we're about to set up for that move at this moment in time. If we did fall beneath these, you know, it's only about an 8.5% move away to come down to 25,000. As you can see, there are some major support regions around about 25,000. We also do have a CME gap to fill down at 24,850. So, I mean, like we said, we talked about what would happen with this weekly candle body close yesterday. We've closed beneath 28,000. We've got that bearish engulfing on all of the crypto charts at this moment in time. And now I think we're due for continuation down to 25,000 within the next week or so. We also talked about what would happen if we closed above a very specific level over the weekends. And we did close over that specific level. If we do come over to the Bitcoin CME futures, you can actually see that we opened up round about 27,435. Now, as we closed last Friday on the CME futures down at 27,270, we basically told you if we do, you know, have a bullish opening as we did over here, you can see this is where we closed on Friday, this is where we opened on Monday. We told you that we were very likely to come down and fill this gap, and once we fill the gap, we would be making new lows and would be setting up for continuation, and that is exactly what we've done. You can see the gap over here, 1 hour time frame. We started making this M pattern formation, double topping with two brutal rejections on the 1 hour EMA ribbons, and now it kind of just looks like we're stair stepping down, and we're at, you know, a very crucial level as I'm recording this video. In the next few hours, if you see Bitcoin take out the floor round about 27,000, it's going to be absolutely curtains for the market. We are going to get continuation. If we are looking at the price target of this M pattern breakdown, you can see it's possible in the immediate short term. In the next 24, 48 hours or so, Bitcoin may find itself falling all the way down to $26,400. A very brutal price target to keep your eyes on in the immediate short term. Bear in mind, this is really for the next 24 hours or so. Like we talked about, it looks like we're setting up for continuation. We closed above that CME gap and we came down and filled it. And as you can see, as I'm recording the video, like we're talking about, we're getting that continuation to the downside like we're expecting. So really, keeping things simple, 25,000 is an absolute magnet, ladies and gentlemen. That is where we are coming down to at this moment in time. If we come over to the 4 hour time frame, you can see on Monday we reverted beautifully up to the 4 hour EMA ribbons and set up a double rejection as well, just like we set up a double rejection on the 1 hour EMA ribbons. I did also talk about, you know, in our last video, how we may be forming something like a bear flag bearish pennant. I would like to say, you know, I'm personally not the biggest fan of how this bearish pennant looks like. I have seen more attractive bearish pennants before. This one is a little bit ugly, although, you know, nonetheless, you can definitely see we've had a massive leg to the downside. We've kind of been lollygagging, holding up this support line. And within the past 12 hours or so, we've broken to the downside of this. If we are looking at the price target of this, you can see that this could yield a price all the way down at 24,400. This kind of just leads a little bit more confluence into the CME gap down here at 24,800. Like I said though, this bearish pennant is not the most attractive one, but nonetheless, even if you're removing the top on this support line, while we were kind of just distributing and sideways chopping, has now been broken. And it looks like with all of these major retests, we are getting continuation and we are going to be breaking down throughout the rest of the week. So that's pretty much all I wanted to talk about for Bitcoin. I did kind of warn you on this very extensively yesterday. In fact, we made a 21-minute video talking about everything to expect in this week. I do have some new charts that I do want to run through with you, and these are these two over here. So let's wrap up the video on this, a little bit of SP 500 analysis, and also one more Bitcoin chart. We haven't talked about these charts before. What we're doing is we're looking at the oscillator, the MACD. We typically normally look at the stochastic RSI, MFI. We've kind of, beaten those to a pulp in the past few weeks or so. So I just wanted to provide an alternative perspective. Now, let's finish our Bitcoin analysis. Let's wrap up on Bitcoin. If we come over to this Bitcoin chart, what I'm highlighting is since the bull market top, you can backtest this further and see that we have had brutal moves as well. I just want to show you the data points from when we topped out of the bull market. You can see the MACD, whenever it crosses this heart line right here, whenever we have these major crosses, major overextensions over the heart line, you have crosses, and you can see we had a major move back down. Over here we had a cross, daily time frame by the way, major move back down. Over here we only just exceeded the heart line, but we did have a pretty brutal move down. Over here, once again, we only just exceeded the heart line, we did have a brutal move down. Over here you can see we were definitely well above the heart line, and these data points over here, we crossed correction, crossed minor correction. I did measure this before I recorded the video. It was only about 1.5%. So do bear in mind, not every single data point beautifully lines up with a massive bearish move right down. But with this cross right now, it's very undeniable that you're seeing a pretty big move happening in the markets right now. If we just take a quick draw of when we've had these crosses and look at the moves that have happened in the market, you can see, almost 45% moves from this cross. You can see 60% moves from this cross. You can see about 22% moves from this cross right here. This was about a 26% move from this cross over here. This was about an 8% correction from this cross over here. This was about a 21% correction. Like I said, I believe when I measured this, it was about 1.5%, more like 2%. And if we're looking at what's happening right now, we've started to move down. We're down about 11% at this moment in time since we have had this bearish cross on the MACD. And looking at previous data points, it's likely that we get more and more continuation to the downside. We're also seeing the same thing on the SP 500. So we've now wrapped up on Bitcoin. Like I said, for the past 2 days, we've provided more than 32 minutes worth of Bitcoin TA. I don't think I have anything else to add other than what I've been talking about in the past few videos. 25,000 is a magnet. That is really what we need to focus on right now. For the S&P 500, you can also see a very similar picture in the MACD since we had this double top, pretty much double top at the all-time highs for the S&P 500. You can see MACD cross, MACD cross, MACD cross. All of these major crosses on the MACD I have highlighted. And we've had some rather significant moves in the S&P 500, down 4%, down 14% for the S&P 500. Over here, right on this candle, down almost 20% for the S&P 500. Right here, 18% move down for the S&P 500. Right here, we had a 7% move down for the S&P 500. Right here, dead cat bounce back up to resistance, then a 6.5% move down for the S&P 500. If we zoom in right now, if we come over to the daily time frame for Bitcoin, you can see for the past few days we've been moving down ahead of the S&P 500. But the S&P 500 right now, zooming in just to show you this, I have to zoom in really extensively because as I'm recording this video, we've really only crossed in the past 24 hours, but you can see that we've just confirmed a bearish cross over on the MACD. And even if we're looking at the most conservative data point in this entire data set for the S&P 500, we've moved down, about 6%, 7% on the least brutal drops. In fact, we had about 4% move back here. Since the S&P 500 actually topped out, though, these 6 or 7% moves were the least brutal moves. And I definitely think, as if we do clear up these data points now, if we get rid of this, get rid of this, get rid of this, get rid of this, get rid of this. Something else that you can talk about is you can pair this bearish MACD cross with the fact that the S&P 500 right now is back at this major red box, and it's also the same for Bitcoin. If we're looking at the S&P 500, you can see if we draw this box out, we are at a major area of resistance. This was resistance in the bull run. We then broke down resistance, flipped it as support, 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 flipped it as resistance, flipped it as resistance, flipped it as resistance, flipped it as resistance. We're back at a very crucial level. Pair this with the MACD cross on the daily time frame, and it's not looking good whatsoever. And for Bitcoin, we're doing the exact same thing. In fact, we've got a very specific chart over here for Bitcoin, which we can pull up. At this moment in time, Bitcoin is at a crucial area of resistance. Like I said, there's not really too much else I want to talk about in this video. The S&P 500 as well. If I remove this, you can see the S&P 500 is also at a critical area of resistance. On the channel, we've talked about how smart money's selling, corporate insiders are selling the S&P 500 at this moment in time. Things are looking pretty dire across the markets, and it's looking like things are getting worse for both Bitcoin and the S&P 500. This is absolutely no game. This rejection from 28,000, weekly candle body close beneath 28,000, bearish engulfing candle on the weekly time frame for Bitcoin, coming right down to the CME gap at 25,000, with lots of oscillators on the weekly time frame and the daily time frames letting us know that the next major move is coming. This S&P 500 MACD cross by itself is nothing to play with. We've literally just crossed bearish today, so it's looking like the next major move for the markets is right here. Things have just gotten worse, ladies and gentlemen. For today, that's all I've got. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. If you want more of my content, feel free to follow me over on Twitter at 618_cowboy. But I'll leave it here. It's been your boy Cowboy Trades. I'm out. Stay safe, you my friends. It looks like things are about to get very volatile. Cowboy out. Peace.